We're joined now from Dubai by Nomura's global technology specialist, Richard Windsor. We need your help here. We need you to explain to us why HP's made this move.
You mean the move to buy Autonomy?
To buy Autonomy, correct.
Well, quite simply, I mean, the company decided that it needs to move much more towards software and services, which, given the recent performance in the PC market, one can fully understand that. What Autonomy does for them is it will give them a much greater degree of critical mass. It will give them access to a lot more customers. And what it will do is, combine with its own software and services products, just allow it to become a much more value-added partner. And HP believes that that as a result of being together with Autonomy, the two businesses put together will actually produce more revenues at more customers than they would obviously by themselves.
But why spin off PCs? Why get out of PCs? Because when you look at other companies and how they're choosing to compete, it's software plus hardware.
That is correct. Now, the thing at the moment is everyone looks at Apple and everyone sees complete vertical integration from hardware right the way through to software and a huge success. But there are an equal number of examples out there where that has actually been quite difficult. So it's quite possible that Apple in some degree is a bit of an anomaly when it comes towards that. But if you look at it on its own, HP clearly believes that for shareholders, without the drag of PCs, which are, let's be honest here, are always going to be very low margin, the shares should command a higher valuation, a higher premium, and should see higher EPS growth going forward.
Why have they failed so miserably on the tablet front?
Well, I think the answer there is quite simple, is a lot of the tablet makers are basically coming up with competing offerings to the iPad and then pricing them at exactly the same price, which any consumer going to a shop says there's only a few applications for this device compared to the iPad. The iPad's the same price. Difficult choice, I think I'll have an iPad. And that's really what's going on here. We actually expect next year the non-Apple tablet market to take off, but they're going to have to cut their prices way, way down below the iPad in order for that to happen.
Let's go back to this purchase of Autonomy. Would you call this move defensive? And what do you think about the value? It's a 64% premium on yesterday's market close, but I believe if you look over the last few weeks, it's about a 50% premium.
It's certainly a high price. I mean, if you look at it, it's 11 times trailing sales. It's also substantially above our price target of £20.50. So from Autonomy's point of view, it's a great deal for its shareholders. From HP, it looks expensive. They're going to have to deliver on those synergies. They're going to have to be able to get a lot more incremental revenues, both from its own assets and from Autonomy's assets, as a result of the combination, to make the price they've paid worthwhile.
No chance that anyone's going to come in and gazump HP and actually pay more than this for Autonomy?
There's a possibility of that. We were looking at that just earlier, and that could cause HP some considerable problems. HP ended last quarter with $13 billion of gross cash. Oracle, which is a potential another suitor for Autonomy, has got somewhere north of $24 billion in cash and short-term investments. There is a distinct possibility of a counterbid, yes.
Okay. And did you mention who that would come from, perhaps?
Oracle is one of the companies out there that's has been thought of. Microsoft is potentially another one that's also cash-rich. And these cash-rich companies, they look quite favorably on acquisitions because a lot of their cash is actually stuck overseas and they can't bring it back into the US without paying a substantial tax on it. So acquisitions of this nature are quite attractive to them.
So, Richard, I was talking earlier with Chris Tinker, an investment strategist, and he was saying this is a really good example of confidence, of a company buying a bargain. And we've debated whether or not it is a bargain, but this is an example of a company feeling confident enough to spend a lot of money, over $10 billion. Do you see more M&A in the tech space as these companies sit on a lot of cash and there's really nowhere to put it?
I think that is a distinct possibility, yeah, and it's something we've been talking about for pretty much all of this year. There are a large number of companies out there, and there is this general move, away. Hardware is becoming more commoditized, software and services are becoming more important, and in order to make a good return on hardware, you have to be able to, if you're going to be a hardware company, you have to offer some degree of value-add functionality on top of that to keep your margins up. So, and there are quite a few companies out there that still just do hardware and need to explore that space. So M&A going forward still very much a possibility, yes.
All right, Richard Windsor there from Nomura. Thanks very much for being with us.
Thank you for your time.